Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes.
So, Graham, Michael Topol, MGT, good to have you here. Thank you so much for making the time. I know it's been busy. Incredibly busy and eventful day for you guys today, right?
Yeah.
So what did you guys drop? Let us hear it.
Well, thanks for having us. It's good to see you again, Miguel.
Likewise.
And today we announced our Series B funding, a $21.6 million round that was oversubscribed. We welcome some great new investors as well as participation from a lot of our current investors. So really exciting day for us.
That's awesome. Anything to add, Michael?
No, I think we're super excited about what we're going to do as we look to the future with these funds, deepening our AI capabilities, expanding our product, and growing across the U.S. In both the admitted and E&S market for small businesses.
Yeah. So you led into it. My question always is when I will talk to carriers such as yourself, and I've asked you this question in the past, the inherent advantage that you guys have as a technology-first carrier. Talk a little bit about that and how it's actually materializing into competitive advantage.
Yeah, it's a great question, and I think oftentimes we talk about being what we call the first AI native neo-insurer, and really you named what a neo-insurer is, which is a technology-first native insurance company.
Right.
And I think when you think about where we can get leverage using technology, because we control the full stack from managing our distribution to underwriting to servicing and claims, there's so many places to drive efficiency using technology. And we're using, whether it's AI or RPA, robotic process automation, to drive massive efficiency. And it's allowed us to scale pretty quickly without scaling our headcount linearly. Yeah. And places we're seeing huge impact, whether it's customer service, we're now triaging most of the low-level customer service requests with automation AI.
Right.
On underwriting, we collect 3,500 pieces of data for every risk that we underwrite.
Interesting.
We don't use all of it in underwriting. A lot of it gets cached for future reference.
Yeah.
But what we do is we're able to surface the things that matter really quickly in real time to underwriters to make better decisions. So this allows us not only to provide a better service for our policyholders, but we can do better risk segmentation, risk pricing, risk selection, and actually reach more policyholders because of that. So we're able to serve some of the underserved businesses in the U.S. So we really care about that mission too.
Yeah, no, that makes a ton of sense. One of the things that I've actually started seeing now in 10Ks is I've actually seen a metric for insurance companies that it's premium per employee.
Yeah.
And they're actually like tracking this piece, and that ratio better be moving in the right direction with technology, right? I mean, makes a ton of sense.
That's exactly right, and that's a metric that we've been thinking about a lot. We've been tracking it pretty much since we started the company, because to your point, I think you got to be able to grow, but you got to be able to grow efficiently, and tracking that ARR to FTE is really key.
Yeah.
Ours, I think, is more than 2x industry average already after only 2 years in operation. So we're pretty excited about where we are already, and I think there's a lot of upside on driving that metric as we continue to scale.
Yeah, got it. As an old school CIO who has worked at insurance companies, that I don't want to say we don't necessarily prioritize technology, but it's not necessarily the first thing that comes to mind, right? But we are held to this kind of 4 to 5% of DWP of tech spend. Is that something you guys watch and track? Is it even come into the fore?
Yeah, it's a really great question. And I think to comment on two things you said there. The first is, it's not that these things are unknown in the industry, but the cultural adoption at larger incumbent carriers is very low. And part of it's the spending cap. Part of it's, if you're trying to actually make a change, let's say you're going to underwriting or customer service, it's really hard to get a mid-level manager to think about, replicating workflows with technology rather than with people, and that adoption, that cultural inertia is really hard to overcome.
Right.
We don't have that problem because we started fresh.
Yeah.
Right. We started with no tech debt, a clean sheet of paper, and because of that, we've been able to drive adoption. And what we found is we don't constrain our tech spend.
Okay.
But what that's allowed us to do is keep our what is typically the highest cost for insurance companies, which is headcount, really low. So as we talk about scaling with ARR to FTE, as Michael said, we're already 2x industry average. We think we can get to 10x industry average. And so the tech spend, it's about the ROI, and that's actually how we measure it. We don't think about a fixed percent of GWP.
Yeah.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.